Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik, and in this video we're going to be talking about my options account and what's been going on there. Some pretty interesting things have been happening over the past month or two. Obviously, if you've seen any of my past videos recently, we've sort of been losing a lot of money, I guess you could say, over the past few months, and I think I'm at least trying at this point to sort of turn that around and learning some newer strategies, I guess, that I just want to talk about a little bit and I guess just share what's going on. So this is sort of my spreadsheet. I guess first I'll show my account in Robinhood. Right now it's around $4,250, and as you can see, I really only have a few positions on here. I have a $9 call on MJ, which is a cannabis ETF, which I've lost a fair bit on that one. This is sort of a leaps, which it expires within about 10 months. So ideally I want to get rid of this position sometime before the end of August probably, so that I don't lose much money to a theta decay. And right now I also have a short call that I sold against that leap, and then I have a Procter & Gamble credit spread, which we'll talk about a little bit. But you can see over the past 3 months, down about 15% on the account, down about $750. So just 3 months ago, I was around 5,000. And 1 month though, I've really started to turn it around. I think obviously some of that is luck with the market, but I think I've been able to do a little bit better. Over the past year, we're down pretty drastically, around $1,000. And all time, we started this account. Sort of some of this history back here doesn't really count because it's my dividend portfolio. But we started this account right around February 1st of 2021 with $5,000. So we're down, about $750 there, which I would say is not terrible given some of the things that I have learned. I've definitely learned a lot, and that's sort of the goal with this, is to kind of do some options trading with a smaller account and sort of learn some things, and hopefully I'll get better over time, and then we'll be able to increase the funding to this account and make some more money over the long term. That is the ultimate goal. But if we want to look at some of the trades here I've been doing recently, as you can see, I've been doing a lot of credit spreads here, and the main reason for that is that they just take up a lot less money in the account. And so it, I'm able to diversify a lot. And the big problem I had was with DraftKings. And as you can see, maybe way back here, I had a DraftKings put at the $42 strike. In November, it looks like I opened that. $42 strike. I took a big loss on that one, and I basically rolled it out to the $41 strike. And again, I took a big loss on that one. Well, I didn't really take a big loss, but I was, assigned those shares. So, as far as the credits or as the puts were concerned, I was actually positive on the puts since I was assigned the shares. But, the stock price, if you've been looking at DraftKings over the past few months, it has really tanked. So, I was assigned those shares at $41, and then stock price kept going down and down. So you can see I kind of have a different spreadsheet just for the DraftKings position. So my initial amount invested was $4,100, and then my options profit was around $210. I ended up selling my shares at $20.50, so my final value of my shares was $2,050, which means I lost about $1,800 on this trade, which is pretty substantial given the size of my account. And I think the reason that I eventually just sold the shares is that I just did not see anything changing with DraftKings anytime soon, and I am glad I did, I guess, because the stock price hasn't really gone up much since I sold the shares. So I sold those shares about a month ago on February 23rd, and have just been working on other things. So the main problem here was that I had about $4,100 tied up in this trade, so only had $1,000 or $2,000 other dollars to work with to really do much in my options account. And once the stock price fell below $30, I was really not able to sell any calls above my break-even price and get any worthwhile premium. So I was able to sell some calls here at the $40 strike price and get a little bit of premium, but I really was not able to get all that much premium from these calls. And you can see, I really only got options profit of around $210, which ideally when you're assigned shares on a put, the stock price isn't that far below your break-even price, so you can sell calls fairly close to the current stock price and get a lot more premium and kind of work that position into a profitable position fairly quickly. But that just did not happen. And the main mistake here for me was, first of all, selling puts on DraftKings over earnings, because it is a pretty volatile stock, one that is not profitable and still has a lot to prove, and combining that with earnings is not a good idea. And also it was $4,100 of capital, which for my account size at the time was around $6,000. That's like 2/3 of my account in one position, which is just not a good thing at all. So if we come back and look at some of the other trades I've been doing a lot of credit spreads. Salesforce, I had a credit spread there, which was a little bit profitable. Got about $34 of profit there. Clorox had a credit spread there in December. These are one of my few of my first credit spreads, and they went fairly well for me. Got some quick profits normally on those. And then I started selling some other credit spreads like Square here. This one, this first credit spread I sold here on Square in January, I got $30 of profit about in just pretty much the same day. I think maybe it was one day. I guess it looks like I opened and closed it the same day. And then 2 days later, I was like, oh, let's make that same trade. And then I ended up, Square started tanking and I took a loss. I rolled it out, took some more losses. So overall, I took some decent losses on that Square trade. But the main benefit of a credit spread is that, you're capping your loss. So with DraftKings, I had $4,100 in that position. Ideally, or realistically, my max loss is $4,100 if the stock price goes to zero. But with a credit spread, the max loss here, it was at the 130 and 125 strikes. So the max loss is just the difference between those strikes minus the premium. So, for this first trade here that I started rolling out, my max loss was really $370. And I think I probably had a loss of around $200 or so dollars. I guess we can look overall. So the first trade here I got $130 of premium, and then I bought it back for $380. And then the next trade, I actually messed up when I rolled this because I didn't roll it for a credit. I rolled it for a debit, which was not good. So then I got $346 of premium, and I bought it back for $375. So it's a little bit more of a loss there. And then I think I had one more roll that I was actually profitable on that last roll. Maybe I wasn't. I thought I had another trade there, but maybe not. I guess maybe I just took like a $279 loss on that trade overall, which, I would certainly have liked to not take that loss, but I did learn a lot in that Square trade, and I was able to kind of turn some other trades around. So I had this PayPal credit spread here, which was at the 95 and 90 strikes, and I rolled that one out. So I initially got $83 of premium, and then I bought it back for $195. So that's a $112 loss. But what I did, instead of rolling it out in time, because we were still pretty far away from the expiration date, what I did is I basically just rolled the strikes down, and I widened the spread of the credit spread there. So I rolled it down to this trade here, which is the 92.5 to 85 trade. So, those strikes are lower, so theoretically safer, but since that spread is larger, there's just more room for loss there. So I could, my capital used or tied up in that trade was $750. And so for that trade, I got $233 of premium and then bought it back for $102. So I ended up with a small profit there of around $19 over, let's see, how long did that trade? I put it around on February 28th, and I took it off the other one on March 16th. So about, 2 weeks, 3 weeks, made a $19 gain, which, is not much, but it's better than nothing. It's better than losing money there. So I was able to kind of turn that around with that sort of roll. And I rolled some other ones. I had this American Airlines trade here at the 13 and 11 strikes, and I ended up rolling that out. And I rolled it to this trade here, which is at the $12 and $8 strikes. So again, both of those strikes are lower, but the spread there is wider at $4 per share. And I was able to I think I ended up with maybe a loss of like $1 on that trade, but it's still better than just, taking the loss or maybe rolling it out further in time. Because I don't really like rolling it out further in time when we're still a month away from expiration, because then it just seems to me like it's so far out in time, that it's kind of just dependent on the stock price, and theta decay isn't really going to help me that much, because my understanding is that theta decay, only works really best, 60 days out at the most. It really starts to kick in around 30 to 45 days out. So if you want theta to help you out, you should be in that sort of range. And then I've also made some dumb little mistakes. Like I have that MJ long call that I've been, selling covered calls on, or I guess poor man's covered calls on, for the last few months. And I literally did this twice within like a week of each other. Instead of selling a call, I bought the call first. So then, because of the spreads between the bid and ask, I ended up taking a few dollars loss on both of these trades, which is kind of annoying, that I just made those simple mistakes. And it's one of the problems, I think, with MJ, is that there's just not a lot of volume and interest there. So the spreads are sometimes wide and it's hard to get filled on those trades. So definitely, once I start to get profitable on that trade, I'm definitely going to, just get rid of it and not really play that anymore, because I just don't like the lack of volume there. That makes it a little bit illiquid. So overall, we can look at my kind of tracking weekly of the portfolio value. So, back at the beginning of the year, we were around $5,000, and then we got all the way down to $3,580, which was a little bit scary, to be honest. And then we took that big loss on the DraftKings shares. And then we started getting some profits. I think this week here was just when I was rolling out some credit spreads, so that's why there was a bit of a loss. And then this past week, had some nice profits there. I was really happy with that. And so hopefully we will continue to keep that going. The only problem is right now, as you saw, I really only had 2 or 3 trades on in my account, so I need to open some more positions in order to make some profits. So hopefully we can do that this coming week, and continue on that grind back to where I was initially. If we look at it on a monthly basis, you can see January and February down around that $4,000 mark. So hopefully we can bring that up and start realizing some profits here. And I did kind of add in this thing over here that tracks my realized profits for the year. So in the year of 2021, I actually realized around $1,500 of profit, which is pretty awesome, which is like a 31% gain in my account when I started at $5,000. And so far in 2022, I've realized around negative $2,400 in profits, which is pretty abysmal. That's about 45% loss from the end of 2021. So definitely some rough months and some big mistakes there. But I think, over the next few months, I'm really hoping to just continue with this kind of slow and steady credit spreads. Definitely been getting into some, safer stocks. Like been selling some credit spreads on Pepsi, JP Morgan, Procter and Gamble, stuff like that. Otherwise, if I was doing cash secured puts, my account size is not big enough to sell puts on those companies. But with credit spreads, I'm sort of able to get in on some of the action there. The one downside, I guess, to credit spreads is I feel like it's a little bit harder to manage the trade, because if you get to expiration, you just take that loss and that's it. So if you don't roll it out, you just take the loss and that's it. Where with cash secured puts, you can just take the shares and then start selling covered calls on it and kind of make it into more of a long-term trade. Whereas with credit spreads, the only way to work through that and salvage the position, I guess, if it's going against you, is just to roll it out in a variety of ways. So that's sort of the harder part about credit spreads, I think, is about managing trades when it goes against you. And so I'm really going to try to work on that. First of all, not having a ton of trades that go against me, but when that does happen, as I'm sure it inevitably will, I'm going to work on being patient and getting my emotions in control, and just work on rolling those out. I like that strategy of sort of strategically widening the spread when you can, and sort of just taking control of those credit spreads. So let me know if you guys have had any success with credit spreads in the past and what you think of them. For me, it's just a tool I've started using because of the small size of my account, and definitely when my account, if it ever gets a lot larger and I just start depositing a lot more money into it, I probably won't use them as much, but I think it's still a useful tool, and it gives me a better understanding of options as a whole. So let me know what you guys think in the comments down below, and I'll see you in the next one.